Hi guys, it's Stock Curry, and we all know a recession is coming. There's no need to convince you of that. So in today's video, I'm going to show you what you should do with your investments in order to profit during this time. So let's get into it! Now, before I get into how to profit during a recession, I just want to discuss a slight channel update that you may have noticed. You may have noticed that I have changed the name of the channel from Stock Curry to Stock Curry We Profit Day and Night. And the reason for that is the Discord I have is called We Profit Day and Night, and very soon I'm going to be releasing a training program that will also be called We Profit Day and Night. So I'm just trying to brand the channel a little bit better and tie in the We Profit Day and Night training and Discord and coaching that all takes place outside of YouTube with the actual YouTube channel. So that's why I have the channel name, in case you guys were wondering. It's just a little branding thing to help lower the confusion on what We Profit Day and Night is, to help people understand, hey, that is actually part of Stock Curry. So that's what's going on with that. All right, let's get into how you actually profit during a recession. Now, I just want to point out a couple of things real fast because there's two little things we have to consider. First of all, over the weekend, we saw that AT&T and Verizon were both raising their prices, which is going to increase the cost of your cell phone plan. Also, Tesla, Ford, and GM are all raising their EV prices as the cost to manufacture EVs grows. Now, the important thing to understand here is that as these companies continue to raise prices, they are doing so because their costs are going up. And what we have already seen from most of the companies who have raised prices are two things. First of all, they're not really able to raise prices enough to overcome the higher cost, meaning their profits are going down. The second thing that raising prices does is it lowers demand, which is further going to lower sales, which again is going to lower profits. So the problem with the inflation that we're seeing is that this is causing company earnings, companies' profits to decline. Now, this is something very important to keep in mind, which we're going to discuss a little bit later in the video. For now, just know that higher cost and rising prices means lower profits for companies. Now, aside from what's going on in the stock market, the G7 nations agreed to ban the import of Russian gold. Now, this is going to have the effect of increasing inflation more, because gold prices and other commodity prices are probably going to rise. And in fact, over the weekend, we did see gold prices go up by about 1.5%. So this is going to be a problem for commodities, and it's going to cause inflation to go up even more. Now, the one thing I do want to point out is this is probably going to be good for gold stocks, although the rises like this tend to take time. They're not going to happen overnight. So even if gold prices do go up, it's probably going to be over the course of a number of months. Don't expect your gold stocks to go up overnight, but certainly this will be a boost for gold stocks. And gold and other commodities are one of the things that you might want to consider investing in during a recession, because typically gold, silver, and a few other commodities will rise during a recession as they become safe havens. People want to put their money into these things in order to keep from inflation destroying their cash, and also it's just a safe haven in case things get much worse, especially if the country enters stagflation, which all signs at this point, it looks like we are going to enter a stagflation cycle just like we had during the 1970s. We already have consumer confidence as low as it was in the 1970s. So everything economically is pointing to stagflation like the 1970s. Basically, the worst recession we've had in this country in 50 years. And so gold is going to be one of those things that you're going to want to invest in, because that should rise as a recession starts to take place. It may not happen right away, but it should happen over time. No guarantees, of course. Anything could happen, but gold should go up. Now, in the short term, very short term, we're talking this week, we should have a green week. And part of the reason for that is portfolio managers adjusting their holdings. They will often sell some of their assets that are up, like energy stocks, and then they're going to buy in to assets that are down, like some of the large cap stocks, especially the technology stocks. And as portfolio managers buy into these large cap technology stocks that are down, that will cause those prices to rise. And because the large cap technology stocks are the ones that mainly affect the stock market, that could cause the overall stock market to rise this week as well. So just keep that in mind. That could cause the overall market to go up. However, notice this. Strategists say that any bounce could be the prelude to a sell-off in mid-July once earnings season starts. Now remember how I said earlier in this video that as companies raise prices, they do so because their costs have gotten too high and their profits are going down. And as earnings season kicks off in July, it's widely expected that companies across the board are going to report below expected earnings, meaning we're going to have a lot of earnings misses. It's also expected that guidance is going to drop, and that overall is going to lower stock prices. So if we expect stock prices to continue to decline, how do we make money during this time? Well, there's two things you can do. One is to shorten up your trades and essentially start day trading. Now, I'm not a day trader. I can't really help you with that. I don't really know that much about day trading. But if day trading is something that you're interested in, there's a group called Lucrum Investing that is very successful with day trading. They actually make money on about 80% of their trades. They've made an insane amount of money this year. If you're interested in learning how to day trade, I would strongly recommend you go sign up for Lucrum Investing. I have a 7-day free trial for them if you guys want to go check them out if you want to learn day trading. My personal style is swing trading, meaning I like to hold for, overnight at a minimum, and in a lot of cases, a few days, few weeks. And we've been pretty successful with that. I've more than doubled my public portfolio since the beginning of this year. Even as the stock market is down, 15, 25%, my portfolio overall has more than doubled. So obviously swing trading has been very successful for us. And if you want to learn about that and how to do that, if you want to learn, especially we use options, so if you want to learn how to trade options, you can come join the We Profit Day and Night Discord, and you can sign up for that at stockcurry.vip/getvip. That's stockcurry.vip/getvip, and you can learn how we've more than doubled our portfolio this year, and hopefully we'll more than double it in the last half of this year as well. So come join us and make money with us. I'd love to have you. Now, if you're not able to trade every single day and you just want to keep investing, the key is to do what's called value investing. And the reason for that is value stocks are now on track to beat growth stocks by the widest margin since 2001. Well, that's interesting. What happened in 2001? Pretty sure we had the largest decline in the NASDAQ pretty much in history. The NASDAQ dropped by 80%. At that time, 60% of dot-com companies went out of business. It was a major recession. And now we're getting signs that we are having a recession, or at least a downturn in the market that's just as bad as it was in 2001 when the NASDAQ dropped by 80%. Now, here's the thing about value investing, is it's pretty easy to do until you enter into a bear market. And then it becomes really difficult. The good news is value investing has made more billionaires in the stock market than any other form of investing or trading. Warren Buffett was a value investor. He became a billionaire. John Templeton, value investor. He became a billionaire. If you want to become a billionaire in the stock market, one, you've got to be very young because it does take about 70 years to become a billionaire. But even if you just want to become a millionaire, which you can do even if you're in your 60s, then value investing is the way to do it. It's the best way, the most consistent way to actually make money in the stock market. So what is value investing? How do you do it? Well, on paper, it's pretty simple. You buy stocks that are undervalued, meaning they have a low PE ratio, price to earnings ratio, and then you sell them once they get back up to fair value. You're not trying to hold them until they become overvalued. You just want to sell them until they become a fair value. Now, generally in the stock market, on average, a fair value is a PE of 15. So if you were to buy a stock that had a PE of 7 or 10, that would be called a value stock or undervalued stock. You hold it till it gets back up to a PE of 15, which typically takes about 4 or 5 years out of a bear market, and then you've doubled your money in 4 or 5 years. And you just keep repeating this process over and over again, doubling or tripling your money every 4 to 5 years, and you very quickly become a millionaire or billionaire. Now, the thing about all of this is it's really easy to do in a bull market. It's pretty simple because companies tend to grow and their future PE ratio is usually much lower than the current PE ratio. And so if you just buy a stock that's got a PE of 7 or 10 or whatever currently, as the company grows and becomes more profitable and gets more sales, you can expect the stock price to grow and get back up to a fair valuation. And it's very easy to do, fairly successful. But in a bear market, everything changes. It becomes extremely difficult. And the reason for that goes back to what I was talking about in the beginning of this video. In a bear market, companies' profits don't increase, they go down, they decline. Now, here's where value investing becomes very difficult. Let's say you find a stock with a PE or price to earnings ratio of 10. Seems like a value stock, but hold on, because we're in a bear market, it might not actually be. So on a stock that has a PE of 10, what that means is the price is 10 times earnings. So if the earnings for the year are $1 and the price of the stock is $10, you take the $10 price, divide by the $1 earnings, that's a PE of 10 divided by 1, or a PE of 10. Now, in a bull market where you expect that company to grow, if you expect the future earnings of that company to be $2 a share, well, then you take the price of 10, you divide by the $2 earnings, 10 divided by 2 is 5. Now you have a PE of 5. So obviously, the stock with a current PE of 10 with a future PE of 5 is an undervalued stock. You can go ahead and buy that. You can expect that stock to triple in price over the next 4 or 5 years, and you'll make a 3x return on your money as it gets up to a PE of 15. So that's where value investing is easy. But in a bear market, it's the complete opposite. So in a bear market, if the current earnings are 1 and you expect earnings to go down, which almost all company earnings do go down during a bear market, the earnings per share drop from $1 down to maybe 50 cents. Well, now if you take that $10 price and you divide by 50 cents per share earnings, 10 divided by 0.5 is 20. So now all of a sudden you have a current PE of 10 but a future PE of 20, which means 20 is above 15. It's no longer a value stock. In fact, it's actually overvalued. It won't get back down to a fair value until the current PE gets down to 7.5 or $7.50 per share. At that point, it's fair valued for future earnings. So even though the PE of 10 looks like a value stock, in a bear market, it could actually be overvalued, depending upon how much you expect future earnings to go down. So if you're going to buy value stocks right now, you've got to find value stocks where the future earnings are already extremely low. For example, the stocks I'm investing in right now have a future PE of around 2 to 3. Those are the only stocks I'm buying right now because those are the only stocks I feel are already low enough value to actually go up and increase during a bear market. Now, I also want to give you one more word of caution for investing in value stocks during a bear market. For a lot of investors, the way we look at the future growth and trying to figure out where it's going to be is to look at analyst rankings. A very easy way to do that is to go on a site like TipRanks, sign up for TipRanks. You can look at all the analyst rankings there. And you can see, even today, most analyst rankings have prices that are going up in the future. But here's the problem. analysts are still expecting stocks to increase their growth. They're still expecting earnings to go up. And we all know that just does not happen during a recession. Earnings go down, not up. So there's a lot of concern on Wall Street right now that investment banks and hedge funds know that stocks are going to drop this year, that values are going to drop this year. And yet, the analysts are still rating these stocks as buy with a future price to earnings ratio going up. They're still expecting earnings to increase and prices to increase. And there's a lot of concern on Wall Street right now that retail investors are getting really screwed over because the analysts are saying go buy these stocks, that their earnings are going to go up and they're undervalued and prices are going to go up, when everybody else on Wall Street, all of the investment banks and hedge funds, know that that's simply not true. So I want to give a big warning to you right now. If you're looking at what analysts are saying, as they say that earnings are going to increase and the prices of these stocks are going to increase, just stop and understand that prices are going down, earnings are going down, and as earnings go down, the prices will go down in relation to that in order to get the valuations down. So be careful. Don't listen to the analysts, because their own investment banks that these analysts are hired by are not even following the analyst recommendations right now. The analysts are going to have to update their recommendations at some point. Unfortunately, just the way that whole world works is they have to maintain buy and hold ratings in order to maintain good relationships with the companies that they are actually analyzing. So they're never ever going to be able to give you a true value on that stock. They have to be positive even when they know full well they need to be negative. It's just a game they play. The analyst ratings are just, they're salesmen basically. So just take them with a grain of salt. Do your own research. Figure out where you actually think these earnings are going to be in the future. That's what I got for you for today's video, is try to find stocks that are extremely undervalued. Like I said, I'm buying the ones with PEs around 2 or 3. Be wary of stocks that look undervalued, but they're actually not, because their earnings are expected to go down, which means their PE ratios are going to go up, and the stock price is going to have to drop even more in order to get their PE ratios down. And finally, if you want to make some money in the short term and you don't want to wait 4 or 5 years, then consider trading a little bit more. You could do swing trading with We Profit Day and Night. That VIP Discord is at stockcurry.vip/getvip. Or you could do day trading with Lucrum Investing, and you can sign up for that Discord at stockcurry.vip/discord. All right, I hope you enjoyed this video and got a lot out of it. Don't forget to hit the like button and subscribe, and I will see you tomorrow.